Ladies and gentlemen, it's Modern Investing on Pod TV. My name is Sasha Starr, and our guest today is Dr. Milan Somberg. Welcome to the show, Milan.
Thank you for inviting me. Today is an exceptional day. We'll talk about it.
Absolutely, absolutely. First of all, finally, the election is over and done, and I didn't change my opinion of Mr. Trump as an individual.
No,
On
you
the
did.
other way, I have to admit that we have to listen to American people and what they wanted. And it's loud and clear. They wanted Republicans in power all the way. The presidency, the Senate, the House, well, Supreme Court, they have it already, and probably essentially, okay, they will have to change Department of Justice, and essentially they will have all available power in United States of America to themselves. So the Democrats are obviously in disarray. They have to regroup, reorganize, figure out what's in it 4 years down the road. There are a lot of explanations what the Democrats did wrong and why they lost so badly, or so on. And I don't think that on this show we should spend a lot of time to discuss it. The things are quite obvious, at least in my opinion. But the market reacts very, very positively to Trump's victory. You don't need my analysis. You can see on Dow Jones, you can see on S&P,
Plus,
you
it,
can see
plus,
almost any index.
plus it's a Wednesday.
And it's Wednesday. That's why elections are being held on Tuesday. So Wednesday market can go absolutely unhinged and go much higher. How are you reacting to this, Milan?
I have a son who has got an engineering degree and an MBA, and he makes his living as a Google products expert. And he says the average American is below average. Electing Trump a criminal. The man is a criminal, yet he got elected. And so the result is the market has shot way up. And you know what's really interesting is Apple has enough cash on hand to buy Disney and Coca-Cola, both huge companies. And the reason why Apple has so much cash on hand is because the managers there feel that the market is overvalued. Berkshire Hathaway, Warren Buffett, same thing. He's got an enormous amount of cash on hand because the market is overvalued. And yet the market is shot straight up. But it went up, the Dow soared 1,300 points so far today. And so what Rosie and I do, a couple of things. First of all, investing should be done by both husband and wife, because the wives tend to outlive their husbands, and generally investing is done by the husbands alone. And so when the husband dies, which happens much of the time, and the wife is unfamiliar with money management, it adds additional pain to the existing trauma resulting from the death of a spouse. So all investment decisions should be made by husband and wife at the same time. Both husband and wife should be watching this program. Now, what Rosie and I do, always Rosie and I, husband and wife, do every day. Now, it's possible now, quite recently, it's possible to sell cover calls and puts, cash back puts every day. It has become possible quite recently. And so we do this every day. First thing when the market starts, opens at 9:30 in the morning. In less than 5 minutes, we sell cover calls on SPY and collect the options premium. And we keep on doing that until we're assigned. When we're assigned, we are in cash, which allows us to sell cash secure puts and collect the options premium. And we keep on collecting those premiums until we're assigned, and then we again in SPY, which allows us to sell cover calls on SPY. And so now Canadian investors cannot do that in their tax advantaged accounts as American investors can. But so Canadian investors need to open a margin account where, yes, they can do that. And that has returned, good thing you're sitting down, Sasha, that has returned 16% annually for over 100 years. Who needs more than that? And it takes no effort at all. So that's what we keep on doing. And so the fact that the market is going up is wonderful. And you know that the American market will be stronger, American economy will be stronger 10 years from now than it is today, 5 years from now, maybe even 1 year from now. And so by buying SPY, it allows us to sell covered calls on SPY, and SPY represents the S&P 500, which tracks the American economy as a whole. And so that's a very safe thing to do. And as I said, that has returned an average of 60% annually for over 100 years. Safe to do, takes no time at all. And we do it on a daily basis, and I'm making more money now than I made as a dentist. So there you go.
Excellent. Excellent. I'm glad you find a safe and predictable and profitable way to trade. It's really remarkable. My point of view is that handful of S&P stocks, say Magnificent Seven, I wouldn't count outliers like NVIDIA, for example, because it's exceptional situation. It's a stock of generations to come, and your and probably my grandchildren will tell their grandchildren that our granddad was NVIDIA holder in a year of 2000.
Well, granddad, brilliant man. Yes.
Okay. So I wouldn't even so much rely on that. However, I would rely on the fact that in the last 10 years now, you were telling us for a long time that, okay, it's a 1 year phenomenon, maybe 3 years phenomenon. Now there is a data of 10 years where S&P was doing something like 10% a year, and Magnificent Seven were doing 75% a year. And it's 10 years in a row. So can you imagine what money you left on the table by sticking to 500 stocks of S&P instead of 7 Magnificent stock of the same S&P?
If you buy the American market as a whole and do nothing else over the last more than 100 years, you would have earned inflation adjusted 10% annually. Not inflation adjusted. Inflation adjusted, you would have made 6% annually, inflation adjusted, for over 100 years, effortlessly. Now, Wall Street wants us to think that what they do is brain surgery and rocket science, and we need them. They want us to think that because that's how they make their money, and the money they make is outrageous. The top people on Wall Street make more money in an hour than a dentist does in a year. And what do they do?
So maybe what they're doing is more valuable than what dentist is doing.
Well,
that's why they're paid so much.
I'm not sure that that's the case. You know what dentists do? If they make a mistake, the patient could die. What medical doctors do, if they make a mistake, the patient could die. What do Wall Street people at the top do to make those millions of dollars? What do they do?
They're doing financial engineering. They're doing M&A deals where they can create additional value, not always, but most of the times. And for that, they're making very handsome fees. And if they're not going to do these deals, they will not get their bonuses. So they will not do financially so well. So, it's accepted system of remuneration, which is acceptable to all participants, and that's why it's alive. However, I'm always wondering, you're talking about what Wall Street wants us to do. You have special communication channel with Wall Street. I don't have one. So I really have no idea what Wall Street wants me to do. If you ask me, Sasha, what do you think Wall Street wants you to do? I'll have, Milan, I don't know what Wall Street wants to do. I don't have communications with them. Maybe they want me to do something, but they are not telling me what is that they want me to do. So I don't know what they want me to do.
I tell you, so you're a smart guy. You can learn. It's very easy. They want you to trade frequently. They want you to trade frequently.
Really?
And people who trade frequently are losers. They want you to day trade. Day traders are losers, and they want you not to buy and hold, but to attempt to time markets and pick stocks. People,
Milan, you know what? I think it would be a much more viable proposition for us to speak about our two of us individual experiences rather than guessing what Wall Street wants you or me or somebody else to do. We don't know what they want us to do. So let's talk about our individual experiences. For example, on my side, I have a core portfolio, high paying dividend stocks that I don't touch. I don't increase my position, don't decrease either. The only thing is what I'm taking out the dividends once every 6, sometimes 12 months. I use this money for travel, for whatever other reasons.
yeah.
But my major portfolio, it's not bigger than core portfolio by all means, but still it became quite sizable in the last year and a half or so. I would call it a fund portfolio. It's a portfolio, and I even don't frequently trade there, but because I have certain strategy, it's involved options big time. It involves selecting a handful of stocks. I never have more than 3, 4 positions at the time, so I can meaningfully manage them and adjust sometimes positions. For example, Nvidia today is 145. Do you think I'm thinking about selling that? No, because I sold quite far away out of the money calls. So, so I want to keep these calls. Are they're slowly with the time, they're slowly dying. So all I have to be just to be there, wait for them to expire worthless, and that's it. Oh, by the way, Shaquille Latimer is here to join us. Welcome to the show, Shaquille. Great to see you. Again, congratulations to you with the victory of Trump. It's one of the greatest victories and comeback in probably all time. Let's be blunt about that. Because who could imagine that a con man, a convicted felon, who could win it all? The presidency, the Senate, the House, the Supreme Court is his. Now he has to get out of this present Department of Justice and get his own Department of Justice, and he will have the greatest power of the United States and therefore the whole world. Now he is the American Tsar, and he is the greatest and strongest man in the whole world. What can you ask more than that, Shaquille?
Putin is happy. Putin is happy. They are friends.
Yeah.
And so, is it true maybe that the average American is below average? The average American has voted in a criminal.
It's American people, that's their will. They showed it loud and clear. And you know how much I love Trump as an individual, but I will not ever go against the will of American people. Just as simple as that.
The market is
Good morning. So sorry, I'm a little bit lethargic. I haven't had really very much in the way of sleep. I left the house at 8 a.m. Yesterday, and I don't even know what the time is now. It's 5 o'clock in the morning now. So I'm a little bit lethargic. Interesting day. Thank you for the congratulations. But as I said, it's not that I've got particular skin in the game on his election. I just simply what I think is the best for the United States, and I respect that there's very many people out there that that feel differently, that feel that anybody else would be better than him. But as I've talked about the flaws in Kamala Harris's campaign, I've talked about the issues with what the Democrats have been doing for the last couple of years, and I really felt that this was the inevitable result. And I have to say, I'm actually surprised because I had many times said that I thought there would be a real upset, that places like Virginia could likely flip, and that's certainly what the polls were indicating with Biden. So, if the Democrats' plan was to simply protect those down ballot positions and to try to make sure that they didn't lose too badly, I would say that they probably have achieved that. That Biden, may well have done much worse than this. But you guys focus on, well, he's a crook and he's a liar and he's a terrible person. I think there's a lot of people out there that either feel that that's a bit hyped up, or that feel that that be that as it may, he's still better than the alternative. And the responsibility for that has to be the Democrats for running a terrible campaign, for not responding to any of the criticism, like not holding a press conference, not conducting an interview in the first month after Kamala Harris became the nominee, things like that. So now I want to just address something that Milan said. Milan, a doctor or a dentist, they do God's work, and the argument that people should be paid more, or should be paid more because of the value to society of the work that they do. I'm not necessarily going to argue with you about that.
If you do want to remind, you'd be wrong. Carry on.
But I do want to remind you that the reason why Wall Street traders get paid so much is because they get commissions or bonuses based on how much revenue they bring in. And the more talented you are, the more you're going to receive. And they are pegged to something. So their overall returns might be pegged to the return of the S&P 500, for example, if they're working for a hedge fund. If they're an internal bank trader, so somebody who, market makes or things like that, sometimes they're expected to make 100% returns on the amount of capital that they've got, because they're taking order flow from customers and then making sure that the order flow hits the market, and they're expected to be able to rapidly turn over their accounts. So, those sorts of people, yes, they're going to earn a bit more. Is the world unfair? Well, yeah, it is.
Yeah.
But I remember when I flirted with the idea of going into medical school, and I remember one of the doctors saying to me, you don't become a doctor because you want to be rich. You're going to become a doctor because you love it. If you want to be rich, go to Wall Street.
Yeah.
I would like to mention something that in case of M&A, the successful practitioners, they are unearthing the great financial powers that otherwise would have been hidden. So therefore, their work can enrich companies, a lot of people, the CEOs, the top managers, and not only top managers, but others and so on. So this is a very creative process. Not all of these processes are coming to be fruitful and successful, but a lot of them they do. And this is how companies like Goldman Sachs and JP Morgan and many others, that's the bulk of their money, what they're doing, not commissions on some schmuck like myself to buy 100 shares of this and sell 100 shares of that's not, and I'm not even doing it through Goldman Sachs or JP Morgan. I can do it through discount broker, and my commissions are $4.95, while I could sell $200,000 worth of stock, but my commissions are still $4.95. So it's negligible on a bigger picture. So I think. Okay, good.
Well, the bigger guys also add substantial liquidity to the markets, and they also correct things. So if interest rates are out of whack, and the market believe they're out of whack, the markets will trade it to the price that they think it should be. If you're looking at a farmer or any other type of commodity producer that wants to have stability of prices, they can lock that in with a futures contract. Who takes the other side? If it's not going to be the end user, it's going to be a speculator who comes in who says, I'm happy to take the risk that this thing is going to be worth more than what the price is that you want to lock in, or less than if you're the end user. So those are all things. Again, it does that. Is that as valuable as doctors and dentists? Maybe not. But as I said, the world's not fair. That's not how the world works.
Oh, exactly. Your mother told you don't expect fair in the world. What I'd like to know is, what do you do when you notice that you have done something wrong? You back out of it and change. For instance, that's what most investors do. And what I want to know is, what will Apple do now that it has enough cash, because it feels the market is overvalued, that they did before the election. Market is overvalued. They have enough cash to buy Coca-Cola and Disney World. Disney is a huge company. Coca-Cola is a huge company. Apple could buy both of them with so much money on hand. Similarly, Berkshire Hathaway, Warren Buffett, a lot of cash, because he felt before the election that the market is overvalued. Now, they're in cash and the market is shooting straight up. They're missing out on something, aren't they? What should they be doing now with all that cash?
People read way too much into what Warren Buffett does, and I'm always fascinated when people read his books, which you should. I think he's a very smart guy. But people read his books and they say, I want to invest like Warren Buffett. I'm like, are you Warren Buffett? Do you intend to be Warren Buffett? They go, but he's a great trader. No, he's not. People would say, Shaquille, what are you talking about? You can't say that. I'm like, no, he's not a great trader. He's not a trader. That's first. Secondly, his objectives are way different to everybody else's, because Berkshire Hathaway, at its core, is an insurance company. An insurance company that he himself says was the worst investment he ever made was buying Berkshire Hathaway back in the day before he built it into what it is. What he is doing is he is managing premiums and managing the forward expectations of what his payouts are going to be. And so he's trying to generate growth. So why has he sold the market? Well, maybe he thinks that Apple has reached its pinnacle. Maybe it's because he's wanting to do something else with the cash. Maybe he thinks that he needs to have cash reserves right now. We have absolutely no idea. All we're doing is speculating on his motivations.
So everything that you're saying here, Shaquille, is true. Buffett says that his favorite holding period is forever.
Mm-hmm.
He's not a trader. What about Apple?
I would like to mention something. There is a great difference between what he says and what he does. Because he initiated position in Apple just a few years ago, and recently he sold the major portion of stock for $216, and the stock a few weeks later shot up to $232. Does it make Warren Buffett a great trader? Not so sure about that. And now it's still, it went down lately, but it's still around $222 or so, and so way above of what Warren Buffett sold it. So first of all, he is a trader. Number two, he's not very good trader. So I would like not to mythologize Warren Buffett. He is a man.
He can't be expected.
Dollars, that's a different story. But
he can't be expected to pick the very top of the market, especially with a position the size that he has. And he still has a position in Apple. The other thing just to remember is you don't know what derivatives trades he's got. Now, he's never been particularly fond of derivatives, but, just a basic strategy. Perhaps he wants to get exposure to some of the foreign markets. Perhaps he's got exposure somewhere else to these markets. And what he's done is he's planted the cash into his Berkshire Hathaway account and then borrowed against it. Again, I don't know, but he's a smart guy. There's reasons for what he's doing, and he's not going to tell us.
Well, a couple of things. First of all, he is 95 years old, and the decisions that Berkshire makes now are to a large extent made by the man who is going to be his successor, Greg Abel. His name is Greg Abel, and Greg Abel is probably making a lot of the decisions, investment decisions that Berkshire is making now. So what Buffett said he's doing he was doing maybe 10 years ago, 5 years ago. But now Greg Abel is probably making more of the decisions that Berkshire is making rather than Buffett.
I'd like to
You
mention
think so as
something.
well?
It doesn't matter to me personally. I mean, you can have different opinions. To me personally, to study what Warren Buffett is doing, it's completely useless waste of time. I'd rather play chess online, or I'd rather watch TV rather than do that, because what he's doing, it's unapplicable to me. Furthermore, I'm in the last year and a half or so, I'm making way much more profitable trades than Warren Buffett on much smaller account. Absolutely, that's true. But for me, it works perfectly. Why would I try to listen to Warren Buffett?
You're exceptional, Sasha. Warren Buffett has made
Thank
more
you.
than double the stock market for more than 50 years. Nobody comes close to matching that. Not even
No,
close.
no, hey, well, that's not fair. Jim Simons, and there's a heap of others that have had similar returns if they were compounded over that period of time. And in fact, Jim Simmons' Renaissance Fund, I believe from memory, that at some point he actually had to pay his clients out their money because, and eventually just he kicked all of his clients out because they were making such high returns, and eventually you get kicked out because they want to keep their own money in. And his returns were quite good. But look, again, the returns that he's making, remember that he's running an insurance company. So there's some asset management there, which is different to what everybody else has. Another person which is fascinating person to read and watch his interviews is George Soros. Now, George Soros is one of those people that's very, very controversial. He's controversial, I think, to everybody. He's controversial to the right because they accuse him of being behind all the left things and trying to destroy society. He's controversial to the left because he's, the devil, and he, does this moral type of trading that hurts countries. Countries hate him because he attacks their currencies, and when he says something, the world listens. That puts them under enormous pressure they otherwise wouldn't be in. Jewish people feel lowly about him because of his activity and him saying he has no regrets and didn't feel bad about taking their watches and their jewelry and all that sort of stuff when he was a teenager. And I can just go on and on and on. I think he's one of those people that is so very polarizing. However, if you leave all of that aside, you just read his trade techniques and things like that. Very, very interesting. But again, very few of us would even be able to trade like that. And for most people, it wouldn't be worth it. It really wouldn't be worth it. I've been saying for 20 years that I think that the Middle Eastern countries will eventually drop their peg against the US dollar. What are you going to do? You're going to trade based on that. You're going to lock up everything and leverage your account up to the maximum in order to make that happen, or maybe in order to profit from that. Same thing with the Swiss franc. When the Swiss franc revalued against the euro, that wiped out a couple of hedge funds when they did that. Are you going to attack the franc in order to force them to break their peg? That's just not realistic. That's not how people trade. And Milan, look, you say Sasha is exceptional. You say I'm exceptional. I don't think anything that Sasha is doing, and I mean this with the greatest respect to Sasha, I don't think that anything that he's doing is incredibly, genius level, something that you could never work out, right? He's put the effort in to learn how to trade options. He's found strategies that work for him and he's applied it. I know many people that have applied just, general, basic, normal, accessible option strategies. They're not trying to do some big corporate Wall Street thing. And those people that take this seriously, they do tend to outperform the market. The people that lose money are those people that think, oh, well, I've got $10,000 and I'm going to day trade the FX market and I'm going to make $1,000 a day. And how I'm going to make that is I'm going to watch a YouTube video. And when I see this pattern, this is the sort of stuff. Those people are the ones that are losing money, right? Generally speaking, if you've got any kind of strategy where you're going to make money as the market moves up, as the market drifts up, you're going to do well most of the time, okay? But the market comes down, Okay, it's a little bit more painful, but so too would your investment have been if you just were in the S&P 500. So there's plenty of ways to make a bit of money. Lastly, if I can just say, if you want to make a higher return, the S&P 500, and you want to be lazy, just go and buy the S&P 500 two times return or three times return. I don't recommend that because the downside risk can be terrible, but just go and do that. And then buy some put options to protect yourself. And hey, as long as you can cover the cost of the puts and keep rolling them forward, you're going to end up making twice as much money or three times as much money. So the idea of just buying the S&P 500 or an ETF over the S&P 500 and just letting it sit there, especially with you guys who are slightly older than me, I don't think that you want to buy something now and wait 40 years for it to grow.
Shaquille, when I started my strategy about a year and a half ago, I had to find the answer to two questions. Question number one, at that time, what was the best, most promising stock? Or two or three, doesn't matter. And the answer to that was NVIDIA, because NVIDIA just at that time started its phenomenal run. Number two, which stock provides the best premiums for its options, puts, and calls? And the answer was same, NVIDIA. Their premiums are second to none, not even close. So when I identified that, I started, remember I told you I started with $40,000 just to try it out, how it works. So my trades were small. I could buy a couple of hundred shares, sell some options, sell covered put. But then very quickly, account started to grow. It went up to $100,000, $200,000. I took out my $40,000. So I'm playing with house money. Today, it's well over $300,000. So the system works, and you don't try to fix something that works. Maybe
that's why
it doesn't work. Maybe.
That's why the handful of core strategies that I've got, I still use them. I love them. It makes me good money. I was telling the story on a previous show of yours a few weeks ago that, after I went up to split up with my ex, I just didn't have a lot of money there. And I actually parlayed that into over $1 million from a $25,000 start. It was just one of those things. But again, I traded much more actively and it worked for me. I'll come to you in a second, Mark. Just one last thing. It also depends on what you're trying to do. Utility stocks tend to be fairly stable. So if you don't want the volatility of a stock like NVIDIA, that you're prepared to sacrifice the sort of returns that you would get with a higher volatility stock, you can look at something like Condors over that part of the market that doesn't really move very much. And the nicotine the cigarette companies, they generally don't move that much either. They're almost like the utilities now. They've got a reasonable yield as far as dividends. They kind of sit reasonably flat. They don't do anything too dramatic. Those sorts of stocks you can just do Condors over and check in once a week, see what your position is. You make a pretty good return. And Milan, to put it in perspective, you can make a 10 or 15% return on the months you get it correct. And when you get it wrong, well, you can either just look at the times that you get it wrong and say, well, I'll just wear it. Or you can take other types of positions, or you can take other kinds of action, adjust your positions. But in order to do that, you need to know options trading pretty well. And I would say that somebody who's prepared to study to get a degree in any kind of subject, you can get a few books out on options trading, spend a year reading different strategies, hone your craft, and you can do something. Otherwise, you're trusting someone else to do it.
A quick question for the three of you, and it's actually interesting that I'm asking this question of two Canadians and an Australian and everything along those lines. But it is a known fact, because he's brought it up a couple times on his campaign, that tariffs might change the kind of strategy of what America does and all along those lines. So if somebody like maybe myself or family members might decide that we want to invest, since part of his logo was Make America Great Again, in American companies. And I think I was going to ask y'all this yesterday about Sherwin-Williams, which just joined the stock exchange, which is a paint company, if I remember correctly. But what stocks that are American made would you suggest that people that are watching this show get into now? Because sure
We
that
can't.
American companies will be companies that people will be looking at over these next several months.
Well, we actually can't answer that because it could be construed as giving financial advice.
Oh,
So
fair
we
enough.
can't really give you, especially me, who is formally licensed. We can't give you specific stocks that you should look at. At most, we can make vague comments about the market. But I will just say this about Donald Trump's tariffs and what effect it will have on the market overall. Because I think you've asked that question a few different ways on a couple of different shows now, not gotten an answer. What I'll say to you is that anything that a government does that's going to have an effect on the economy is going to be beneficial to some companies and hurtful to others. Okay? How you assess that, or if you can assess that correctly, you can make some good money from doing it. I think you will see an increase in small businesses. I think you will see an increase in businesses that decide to locate in the United States as a result of protective tariffs. The question is what happens in 4 years' time when potentially it'll go back to the Democrats. Like what's the long-term plans there? I think as traders, and I've made this point a lot when people have said to me, well, you only want Trump to get in because of your trading activity. It doesn't make any difference to me as a trader. As a human being, it does. I don't like to see my American friends suffer in poor economic conditions, and by extension, my Canadian friends. If you ask a 25-year-old kid in America, what was it like growing up through the Great Recession? Many of those kids will be able to tell you that, they saw their parents stressed out or maybe getting divorced and they didn't have enough toys growing up and how hard it was. If you ask a 25-year-old kid here in Australia what it was like during the Great Recession, they'll likely say to you, what Great Recession? They won't know what you're talking about because we boomed over here. So as a trader, you can look at that. You can say, hey, that particular economy isn't doing too well, but I can certainly go and invest my money over in this other economy. You're looking for normally a stable economy and a safe economy, unless you're really brave and you go to emerging markets. There's all sorts of things as traders. I don't think much of this really matters. Tax rates can go up, tax rates can go down. Corporate regulations can go up, corporate regulations can go down. Extra regulations means that it's beneficial to some companies, especially the bigger companies. The more regulations you've got, the more that they like it because it helps to keep out competition. Less regulations means more competition, means that you might actually see other companies start to flourish. And as a trader, you just assess that, and it really doesn't matter to you whether the market's going up, down, sideways, or whatever. There is a strategy that will help you to make money in any market condition if you put the effort in. I would argue that's not that much effort.
Just Sasha, really quickly, because I know y'all are wrapping up and everything. I understand what you said about restrictions and what you can and can't say, and y'all are all very successful in the economic space and everything. But if I can rephrase the question, are there certain industries that you think would do better than others, like the hospitality industry or the travel industry, or certain industries in a broader sense in terms of kind of like sorts of things that people might want to look at? Because I wouldn't be specifically saying a specific brand, but it might be giving people an idea of what industries they might want to look at.
I would think the travel industry will do quite well. I think even airlines and even cruise lines will do well, because if indeed under Trump's rules the oil will go down in price, hopefully it will, maybe not, but more and more people believe that the oil prices will go down. Not maybe to $50, $55 maybe, but they'll go substantially lower. That will definitely benefit airlines and cruise lines. There's no doubt about that. All high-tech sector is doing quite well as you do.
The answer to stock picking is very simple. Don't buy individual stocks, because if you buy them, stock goes up, the buyer is right, the seller is wrong. Stock goes down, the buyer is wrong, the seller is right. Can both of them be right? So don't pick stocks. Most investors underperform the market. All investors could equal the market. Sasha, what you're doing is so productive. Can you teach me how to do it? Can you teach all investors how to do it? Whereas buying the American economy as a whole by buying an exchange-traded fund which tracks the S&P 500 is something you can teach a high school student in less than 5 minutes, and that approach to investing will equal the American economy, the strongest economy in the last 200 years, And it's so simple, and it takes no effort at all. And that's what we recommend, because stock picking works only for some. Most investors in the market are losers. They don't need.
If you want to use the markets to become much wealthier than you otherwise would have been, I think you need to put more than 5 minutes effort in. To Mark's question, the automotive sector, the manufacturing sectors in the United States are likely to do quite well. Food production is likely to do quite well. And what will be very interesting to see is those companies that have massive domestic workforces, working in essentially back office functions. Why? Because companies are pretty smart and pretty cutthroat. If I was running a company in the United States and I had manufacturing, but I also had a whole heap of back office functions, what would I do? Bring all the manufacturing jobs back, and I would offshore all the professional jobs, because you can't tariff that. See, if I have all of my accounting staff, or all of my legal staff, or compliance staff, or whatever, right? My IT team, if I have all of them located in the country where I can pay people $1 a day or $1 an hour, as opposed to paying them $30 an hour, that's going to save me an awful lot of money. And you can't put any tariff on that. You can only put a tariff on the goods, the physical goods that I bring in. So therefore, I increase the jobs in manufacturing, I decrease my professional workspace. And that's the big danger in what Donald Trump's proposing. Having said that, he has made a very strong effort to appeal to those working class voters, the unions, and people like that, who feel as though globalization has hurt them.
Both Harris and Trump want to bring manufacturing back, or enhance manufacturing, or increase it. People working in manufacturing hate their jobs. They hate Mondays, they love Fridays, they don't like to go to work. And manufacturing can be replaced by innovation, which we are good at. North Americans are good at innovation, and we should let the Chinese do the manufacturing. And even the Chinese are offshoring manufacturing to Serbia and Vietnam and other places, and enhance innovation, which people who are involved in innovation love what they do. They love Mondays. They're at it 24/7, and we should encourage innovation, both because it's productive and it's satisfying for the people who.
Well, how did they end up breaking the strike for the dock workers? One of the things that they agreed to was to not introduce AI into that space, which is, I believe, one of the problems with unions, is that they will often try to protect the job at the cost of efficiency, and somebody has to pay for that at the end of the day. But look, yes, innovation is absolutely important. As I said, I think the long-term effects of Donald Trump's policies is yet to be seen, but it's one thing to say Democrats wanted to bring manufacturing back. Forget about Trump. So too do Republicans. What have they done over the last, since I've been alive, over the last 40 years? The United States has gone from, this vibrant industrial base to being an industrial wasteland now. When you go through rural America, it's heartbreaking to see. And I think the starkest contrast that I can really think of to just shows you how poorly the United States is doing in so many places is going to Niagara Falls. Now, it's one thing that Niagara Falls is more beautiful on the Canadian side, but that's just because of its physical location, how the falls fall, right? The view and everything is much better. But you have a look at what the Canadians have built in Niagara Falls. What a special place. A gorgeous place. I remember waking up one day, we had a beautiful suite at the Hilton Hotel, and I woke up and I looked out the window, and there's Niagara Falls. And about then, I got a text message from a friend of mine in New Zealand. They said, where in the world are you? And I said, I'm just waking up looking at Niagara Falls. They're like, well done. So beautiful place. And I wanted to go and see the American side. And everyone said to me, you're not going to like it over there. You're not going to like it over there. I said, no, it'll be fine. It'll be gorgeous. Maybe I'll go and check out Buffalo. So we cross over the border, and I took the wrong turn because, when you cross the border, your phone has to switch networks and all that sort of stuff. And so my GPS wasn't working. Didn't have any clue what I was doing. and the first thing I saw was a boarded up house. And I remember driving up to the other side of the falls when I finally managed to get there after taking a few wrong turns. And I remember looking back over at the falls, and you've got this beautiful thing the Canadians have built, and you're looking at the American side, and you're just going like, what on earth have the Americans done over here? And the real sad thing about it, especially in America, because they say they're capitalistic, but private equity and the sort of Gordon Gekko types have really gutted that country. And I think that Donald Trump is really the appeal for Donald Trump. Love him or hate him, the appeal of him, I think, is those people that say he's going to fight for us, he's going to bring our jobs back.
Okay, let's hope that he will succeed. He has all the powers necessary to do anything what he wants. There is nothing can stop him or restrict him. He is all 100% of power to do everything what he needs. I'm not going to criticize.
Adam Lamparello is patrolling you from afar.
Yeah. Yeah, well done. Good try. Okay. But anyway, I would like to thank you so much, Shaquille, and you, Milan, for today's program. And I wish you successful trading and have a great day and great weekend. And we'll speak to you soon. We'll see you next week, same place, same time. Bye-bye, everybody.
Thank you. Bye-bye.